Okay guys, here we are back to the Aussie dollar key levels, monthly, weekly, daily that are set up. Now, and obviously we got some trend lines as well, which I went through in the last section. So firstly, the direction on the Aussie, I did mention, is pretty all over the place. We have the lower highs on the weekly here, 1, 2, 3. But we also have a lot of confusion because we recently pinned straight down to the daily area of support. This is the weekly time frame. Let's go down to the daily to get a little more clarity. And I was looking and hoping Aussie could maybe rebound from the back end of this trend line, but we're back above it now. Very, very strong day so far. So with that being said, I'm just going to remove this trend line for a moment and see if we can go ahead and apply any Fibonacci. So normally we would have the higher lows, higher highs, maybe even the last higher low circled, just for our convenience, onto the next step, which is this step, the fib. And I'm just going to go through a few examples on how I would plot the Fibonacci tool on here to get an aim and an idea as to where this market could potentially run to. So when we do this, we don't want to zoom out too far. We can use Fibonacci on the monthly time frame, but I'm not a huge fan because it can confuse people. So I like to just maybe start on the weekly time frame to get an idea as to where the market could potentially run to. So in the case of this particular currency pair, because this is a significant low, we have a huge bullish engulfing, and it was the yearly lows as well into 2016. And we've got this area up here, which we already know is a significant high because we have the 3-pin pattern, 1, 2, 3. Let me just zoom in for you. Just here. So 1, 2, and 3, and it's also at monthly resistance. So what I'm going to go ahead and do is I'm going to grab the fib tool and I'm going to have a little play around. It's all about trial and error, guys. So chart time is vital, and I can't keep going on about how vital chart time actually is. And again, doing your before and after screenshots and so on. But here we have a significant low, so I'm going to just line my crosshair up to the wick, and there's my 100%, and I'm going to plot it and I'm going to rest it on the top of the spike just here. We have A to B, A and B. Now this one looks as if this weekly time frame looks as if the the AUD USD, has in fact rejected the 61.8 zone, and it's also a weekly area of support. So you will see the way I've taught you and how to put the key levels on there, and you've joined AstroFX so you can get regular updates on these key levels and analysis. We have a confluence. The confluence is simply the 61.8 lining right. It's not on top. However, it's very, very close. And we can see what's happened here. We have this bullish engulfing formation. Okay, the bullish engulfing, the green has outdone the red body of the candle, and the 3-pin pattern where I've actually snapped that daily area of support onto, so 1, 2, and 3. And we've breached the 61.8, which can happen at times. It can often come maybe in between the 61.8 and the 78.6 there, and it's still classed in my books as a retracement, a valid retracement. So currently, now this is just for the purpose of finding a bias and a direction. The moving averages are in fact crossed up to the upside. The blue is above the red, and you can see that there quite clearly. And yeah, as I was saying, this is a valid 61.8 retracement. So what are we expecting now? As we've discussed this, we have the A, B, C retracement, and this time it's up to 61.8, and the weekly support 0.7225. And with this, I'm looking for it to come up to make new highs, and the minus 27, the 127% extension level is lying directly on top of the monthly resistance. Look at that, 8100. So Aussie dollar, now I've looked at this on the weekly, and we're going through this example together, guys. I am looking for this pair to continue up to 0.8100, say, just to say a round number. So we've got two confluences up there as well. So the two confluences are minus 20%, minus 27% or 120 extension, and monthly resistance. So this is what I mean about taking your time, doing the levels properly, getting clarity on the chart so we can then layer on the other tools in order for us to find out where a potential market has the potential and chance to run towards. So in this case, Aussie is looking to come up to 8100. We're currently at 7650. So around 400, 450 pips to the upside. Now, in the case of my analysis personally, I would then take a screenshot of this. I might write some more notes on that. Because remember the other rules we've gone through, if the monthly resistance is broken, there's one here, if we breach this monthly resistance, there's a 75% chance the next weekly level is going to be achieved, which is 0.7925. So that could be one of our first points of call. But our fib, our ABCD fib, is telling us Aussie has got the potential to come all the way up to 0.8100. Now, I'm doing this mid-September, sorry, more or less the start of September 2016. So you guys who are joining the course later on can go back and see if this was actually a viable Fibonacci extension, and did we actually come anywhere close to where the fib tool is allowing and helping us to actually predict. So remember, this is a higher high, this is a higher low, and this will be a new higher high point for the Aussie dollar. And you can see it across here as well where the brilliant confluence is. So guys, I hope so far, just by going through this fib, you're getting an understanding of the market is not random. We can use the Fibonacci sequence, and you now know the importance of the Fibonacci sequence, as I've already explained. It's in nature, it's in the human body, and we're now using it in the markets to predict where the market could potentially run to. So that's that one there. So this is a weekly fib on the Aussie dollar. Now, to take this off, so what I would normally do, if you found something on a weekly time frame, because there's a likelihood we're going to find something on the daily as well, because you can get the Fibonacci within a Fibonacci, and I'm not going to confuse you with that right here. But again, always please refer to the book for this one. Now, this was a bearish example of Aussie before it reversed from 700, and I actually put this into the book around November 2015. So as you can see once more, we have the consolidation range over here. We have the bearish engulfing formation, which counts for my significant high, and I've pulled it from A to B. See retracement, 50%. As you can see, the shooting star there has come off the 50%. It's made new lows, but it didn't go all the way down to the D extension straight away. So this is an important point, that on the weekly and the daily, it's not going to go to these points in a drop of a hat. It may take some time. So that's why we use it as an overall bias and to assist us in the overall direction. Because remember, we want to get the overall direction of the higher time frames, top-down analysis, going back to one of the earlier videos. So then we can go down to the smaller time frames in order to find a trade in that direction for the highest probability. So what's happened here, we've came back up, we've gone into another area of consolidation for around 4 months, and we've actually pinned right there. Let me zoom in on that. We've pinned right there at the 38.2. So you can think of the Fibonacci retracement levels as support and resistance. In the case of a bearish ABCD fib, they are resistance levels. And in the case of a bullish ABCD fib, they are support, support, support. So they are external confluences and factors we can layer onto the chart in alignment with what we've done so far in order to get the overall trend direction and to assist us in making some pips. Now let me just go back to the book. So then what happened here, we actually made new lows. We smashed straight through the 27%. That candle there is a shooting star with no wick at the bottom. It's a Maribozu. The moving averages are down, crossed over to the downside. So we smashed through target 1 and we've actually reached target 2 and beyond. Okay, and beyond. We found support around the 0.7 level, 0.7000, And Aussie, since then, if we look at the live chart, since then, we found support there and then we rebounded all the way up. So that is what I mean by when I was plotting these levels, 0.700, 0.7050 is a strong level because, again, I've been watching this currency pair for quite a while and I've been monitoring its progress for nearly 4 years now. So that's what I mean about consolidating and bringing your currency pairs in so you know these currency pairs like the back of your hand. Anyway, that's the weekly. So what I would do, I'll take a screenshot of that, maybe write some notes, and then I'll probably remove my fib because it might get a little bit messy as we go down. There will be a point where, as you really remember all of the key levels and so on your individual currency pairs, you will have no problem remembering all of this and keeping all of this in your mind. Let's go down to the daily. So our bias on the weekly fib is in fact bullish, and we have quite a 400, 450 pip run up to the monthly resistance there. But also on the daily time frame, we can also find more fibs. So I'm going to go from where this high low point is here, and I'm going to drag my fib up to the resistance and where we can see the 1, 2, 3 spikes there as well. So now I have, guys, I have A, I have B, now I have C retracement. This one's pulled back all the way down to 78.6, which is still a viable retracement going forward. And we're absolutely shooting off at the moment. This is the current daily candle. We're around nearly 100 pips on the day. We're 80 pips so far. I reckon we could do a little bit more though. But if we just remove the candles for a moment, the moving averages may start to cross back over to the upside very, very soon. The Fibonacci extension on this particular daily fib is coming in here, minus 27, 0.7838. Or we can just maybe call that and line it up with 0.7850. All right, so we have the overall weekly fib, which may be fulfilled over time, and now we can see this daily Fibonacci, which Aussie may fulfill. It could even be a week, it could maybe last a week and a half or 2 weeks of trading. So we have two factors, weekly and a daily, that are now telling us Aussie dollar is respecting Fibonacci, and we have potentials for targets 1 here, and then as you can see the 61.8 target 2 is just above our weekly resistance anyway. So what we have here is monthly %. Okay, just there, and we also have the fibs coming into alignment with that. So I hope you can see where we can find the A, B, C, D. Before that though, we could maybe have drawn a fib, let's say from this higher low point here to this one. A, B, C retracement right here on the 61.8. And we just came very, very shy of that Fibonacci there. And remember guys, it's all about probabilities, 75% chance. And we capped the monthly area of resistance beforehand. So in that scenario, A, B, C, D, you always have to be mindful and you always have to be looking at what is the potential, if we have a resistance or support right above or below one of our Fibonacci targets. So that's that one there. So this is the current one on the Aussie at the moment, A, B, C, D. It'd be interesting to see how this actually plays out. But again, you can actually go back in time, plot all of this on your charts, and you can go and see yourself. Now, aside from all of that, when you're actually learning fibs and you want to have a crack at the Fibonacci on your own, we are going to use points at more or less the support and resistance levels to simplify our A and B points. So, in the case of, we got the daily support over here, so we can use the significant lower daily support and we can drag it up to our next wave at the next daily resistance. So we have A, B, the shooting star there. Sorry, I haven't got a mouse with me at the moment. A, B, C retracement. So we have wick, bullish engulfing here. And we have daily support at the 50%. So this is an A, B, C, and then afterwards we've hit the D extension. well, even though this is the first wave, A, B, C, D, we still stalled around the D extension and pulled back, and so on. So I can just pull up another blank chart for a second. If I just pull up the, let's say, USD CAD. So with the USD CAD, guys, let's go to the daily time frame at the moment. Without any key levels on there, simply drawing a fib, again, this is the weekly, just as an example, I'll go from the top of the bearish engulfing, bring it down, and I will lay it right on the wick here. So I've gone from bearish engulfing to the bullish engulfing. And I know off the top of my head, these are major key levels as well. So that always helps. With this example though, this one, we haven't actually reached the 38.2. As you can see, with this wick here has come more or less 40 or 50 pips shy of that. So this is not a valid retracement. That's not a valid retracement for me. It would have to actually hit the 38.2. Okay, something like, if I had to modify that a little bit. As an example, it would have to, that would be a valid retracement, 38.2. And then the extension for USD CAD will be down here. But as I say, well, with this one, it could be an exception because as you can see, if you can see the bearish engulfing candle here, can you see that it's not neck and neck? Now, this was the result of a gap up over the weekend. So USD CAD has gapped up, it's made a high, and then boom, it's forced all the way back down. So that where I've placed right on that wick there could in fact be the official high. And I would actually class that, you know, it's a few pips off, but I would class that there as a viable 38.2 retracement. So the ABCD here, so we've got fib A, got fib B, and I know off the top of my head this is weekly support right there, so right there, and then we also have the 38.2 retracement over there. Looks as if we can maybe sling a trend line break in there as well. Moving averages are getting ready to cross over on this pair. And then last but not least, we have that's our target one there. So A, B, C, D. So this is a weekly. So from 1.2855, we're looking at USD CAD coming down to 1.1893. So that's a whole lot of pips there. We could see another move like this. So we've moved down, we've gone into consolidation. We've hit the 38.2, we've stayed in a range. Now it could be time for the USD CAD to break out to the downside. And yeah, this could give us a great bias as to which way we want to be trading the USD CAD. We want to be selling. So that's just a few examples there, guys, on how we can utilize the Fibonacci, and I hope you are getting more familiar with the levels now. I'm going to go into more about how we can combine it on lower time frames, how we can combine it with other strategies as well, and all about stop placements too. So that's just an overall tutorial on using it on a weekly, the daily, and what we're actually looking for and how to plot that. So remember, fib A, B, C, D, done. Okay, so I hope that helped. On to the next video.